Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Market momentum continues as Nifty hovers around the 10,600 mark. Auto and tech players lead the gains while PSU banks weigh, broader markets outperform. Oil marketing companies gain on the last day of the week even as retail fuel prices continue to rise. And Maruti Suzuki says it's looking to set up a joint project with Toyota for common products in India. Sun Pharma and Tech Mahindra are the two Nifty companies coming out with their quarterly earnings today. In Congress's Ramesh Kumar is elected Speaker of the Karnataka Assembly unopposed after BJP withdraws its candidate. Chief Minister Kumaraswamy will take the floor test in a short while from now.
Well, viewers, thanks for tuning in to Countdown. It's a buoyant day of trade today. The Nifty Bank ably leading the charge. The Sensex and the Nifty 2 providing, or rather, moving in tandem. And we've had a really good day of trade. The mid-caps and the small-cap indices, in fact, are doing much better. The Nifty mid-cap index, for example, is probably up 1.5% or thereabouts, 1.61%. The small-cap index, too, would be trading close to the day's highs. The percentage gains may vary a little bit here and there. And the market breadth has only improved. It started off well, and I think that the advance decline ratio has widened. If you look at this chart out here and the two worms, the gap, which was good, has only widened. So it's a really buoyant day of trade. This is quite unlike what happened in trade yesterday, wherein the large caps moved up and the index and the mid caps and small caps didn't. In today's session, it's a good trade, accompanied by what's arguably very strong market breadth. Bring up the heat map. We anyway started off with a fair bit of green on the screen, and I think the quantum of green would have increased and would have strengthened a bit. So if you just look at the top row, look at the kind of gains that are coming into OMCs and upstream companies. So ONGC up about 4%, IOC is about 3.5% up in trade, GAIL about 2.5%, HPCL 2.5%. So oil and gas is meaningfully clawing its way back. There is strength in Hindalco. Actually, Hindalco and Tata Steel, both of them are doing well. What is not doing well is probably Vedanta. It should be somewhere down there. But okay, even Vedanta has moved into the green, interestingly, in the last few minutes of trade, but marginally. But Hindalco, Tata Steel, and a few others are doing well. The Bajaj twins continue to rise and shine. It's a buoyant show all round. Hardly any losers. Coal India maybe 1.5%, Bharti Infra 1.5%. But you know, really no material necessary reasons for these stocks to do what they are doing. By and large, a happy day of trade, a buoyant day of trade, and a bunch of mid caps are doing very well. Look at power names. Look at what's happened to Result Boys as well. Sudarshan Chemicals, for example, a lot of stocks which are flying around in trade. But what about the liquid universe, Agam? I believe there would be enough and more stocks in which we are seeing either short covering or some bit of long formation.
Absolutely, Neeraj. That is the case right now when it comes to the derivative space. Let's pick up on the Nifty Futures right now, and as one might expect, there are more longs building up there. There hasn't been a substantial increase in open interest when it comes to the Nifty Futures, but there are longs all the same. Even as the index advances by nearly 1%, we've seen about a 1.5% increase in OI there, and of course the Nifty Bank also advancing by as much as 1.5%. But before I address the markets, we do have RC Bhargava, the chairman of Maruti Suzuki, joining us on, well, the news with respect to the tie-up with Toyota. Good afternoon, Mr. Bhargava, and thanks for joining us. If you could just give us an idea about what this tie-up means and what it entails.
No, as you would recollect, Suzuki and Toyota had signed an MOU in February last year. That MOU had talked of 3 areas of technology work which they would do, basically relating to environment, safety, and information technology, and that there would be an exchange of products and components between the companies in India. This press note which has appeared today is one of the outcomes of the discussions which have been going on between the two companies to give more flesh to that broad MOU which was signed in 2017. So there was an earlier press note also on the same subject, slightly different. Today is a further progress which has been made in that direction.
Okay.
Mr. Bhargav, this is Yatin also joining in from the research team. Thank you so much for joining. Sir, I just wanted to understand the contours. What I understand from the press release that you have sent to the stock exchange is that Toyota Kirloskar will be producing Suzuki models. I just wanted to understand, will Maruti Suzuki, as a listed entity, also produce some cars for Toyota, or is it only the Toyota Indian unit that will do the manufacturing part? I understand that you will be using your each other's distribution network to, distribute your products mutually. But on the manufacturing part, is Maruti Suzuki to do something, or will it play its part?
No, in the previous press note which had come out, that had been clarified that both companies would produce cars for the other companies, and they would be sold. So we would also be producing some of our own models which would be sold through Toyota channels with appropriate branding and small changes made in them.
And sir, what about the distribution cost or the distribution margin? Will Maruti sell the cars, and will it be equally profitable as it is doing with its current distribution network?
No, none of these details have yet been worked out.
Okay.
As to what the margins will be and how the pricing will be done and such thing, that is still to be all worked out.
And sir, in terms of the joint development of a powertrain between Toyota, Denso and Suzuki, will Maruti also, be using components or engine parts which are, developed or co-developed by, these Japanese majors?
No, this powertrain is to be developed by Suzuki with technological help from Toyota and Denso.
Right.
But the development is Suzuki, and when Suzuki develops this powertrain,
right,
it will certainly be available for use by Maruti here.
Okay, okay. So, broadly, whatever products are developed in the joint venture or in the understanding, Maruti will benefit in terms of getting superior technology access through this mechanism, right?
Correct, but that's not a joint venture between Suzuki and Toyota.
Okay, that is the co-development agreement wherein they will provide the technology.
MOU, there's no joint venture.
Okay, just an MOU to co-develop a product with their technology.
In three areas, yeah, that's right.
Okay, and sir, any other details that you can share with us at this point in time as to how will Maruti benefit from the venture?
As the press note says, this is what has been decided just now, and the details will be worked out in due course.
Okay.
So no details at the moment beyond what the press note gives.
Okay. And sir, one final question. The Suzuki chairman Osamu Suzuki said that it is my hope that the new joint project will contribute to the future success of both companies, not only in India but also in the global markets. Can we assume that the Maruti export also entails this particular venture with Toyota? Meaning, will you be able to produce Toyota cars or their models in your factories and export it?
No, as this press note says, so Suzuki and Toyota will jointly develop the African market.
Okay, okay, okay.
And cars to the African market will essentially, I would think, go from India.
Okay.
Because the bulk of the market in Africa is likely to be compact cars, the small cars which we specialize in.
Sure. Okay. So you will play your part there.
That's right.
Okay. Thank you so much, sir, for speaking to Bloomberg Quint and taking out your time. Thank you so much.
Thank you.
Yeah. So, what I understand, Neeraj, from the entire conversation with Mr. Bhargava is that right now the entire collaboration is in the nascent stage. Two things which we understand is, number one, that Maruti and Toyota both will use each other's distribution network to market their own products. Of course, the marketing margin or the margin sharing between Suzuki, Maruti, or for that matter Toyota is not yet decided. So we are not sure if Maruti will enjoy a similar margin to the current dealer network, and what will be the margin if it sells through a Toyota dealership. So that is not clear as to how will the profit sharing or the margin sharing be. But they are co-developing a couple of products, especially Suzuki. The technological enhancement will come in from Toyota and Denso. So probably if they are able to develop a powertrain engine, efficient engine, then probably Maruti will benefit, in the long term or the near future. So let's see how really does this shape up. I don't think so. There is something material which has happened. But it will be important to watch as to how really do they access the export markets, how do they do production in the joint market, and how do they share margins, because it should not happen in such a manner that Toyota and Suzuki enter into a collaboration wherein Maruti is kept out of it. And if that happens, market will not take it in the right sense.
The BSE release seemed to suggest that that will not be the case. I thought the BSE release seemed to suggest that from India's perspective, Maruti, Suzuki, and they spoke about how India specifically. I think one of the things that Yatin, please correct me if I'm wrong here, but it says that Toyota Kirloskar Motor Private Limited will produce models developed by Suzuki for sale in India through the Toyota and Suzuki brand network. Are you suggesting that that we don't have clarity on whether Maruti, Suzuki, India will play a part there?
So, Mr. Bhargava said that they will be, selling their own cars to the Toyota network. And in the press release that they have mentioned that not only Maruti Suzuki produces cars for Toyota and, themselves or Suzuki, but also for Toyota. But what they have now mentioned is Toyota Kirloskar will also produce cars for Suzuki. So, for the local market. So if that really happens, if Toyota Kirloskar starts producing, cars in India, Suzuki is already producing cars in Gujarat, and Maruti is already producing cars in Haryana. So you have multiple facilities producing the same car. So how really does it impact Maruti Suzuki? And I think Mr. Bhargava was not able to give us those details. He said that those contours are not yet finalized in terms of if they are manufacturing cars, selling through the Maruti network, what will be the margins, or if Maruti produces a car, how will they sell it in the Toyota network? So, those important contours are not yet finalized.
I think the broad question, Agam and Yatin, if I understand correctly, is that for the cars being manufactured through different facilities or cars manufactured by Maruti and sold through different facilities, the quantum of margin is not known.
Yeah, quantum margin is not known, and who produces how much. That is also important. So if Toyota were to, hands-on produce Maruti cars, then what will Maruti do? And, how will the facilities behave? Or, how will Maruti focus on the export markets if, Suzuki and Toyota were to co-develop the African markets? Right. These are all the questions which are still not answered.
But what also interesting is that they will be developing cars together, or for that matter, even machines. And I think that'd be exciting because we all know, and much has been spoken about the efficiency of the Toyota machine specifically in this case. And that can certainly help Suzuki out in the long run. Definitely Maruti as well. And we already know that Maruti has been moving from leaps and bounds in the evolution of their machines. And if we do see that technology from Toyota come in, and I think that's going to boost the quality of the Maruti cars, and they can then start competing with perhaps a slightly more premium segment.
And Neeraj, more importantly, what I think is that this collaboration between Toyota and Suzuki is more of a technological collaboration, wherein Suzuki will probably develop a powertrain with the Toyota's technology, and since Toyota is giving technology, is helping R&D at Suzuki as a gesture has allowed an arrangement in India, which is one of the biggest markets of Suzuki outside Japan, so that there can be a tit for tat. So something to take, something to give, and in the process, most important thing to watch out for will be, are the interest of Maruti Suzuki protected? Because if the two parents or the two Japanese majors are doing some collaboration, and if it is adverse for an Indian company or Indian subsidiary, then that is a thing we need to watch out for. Right. For which I think as of now the management is not providing anything. And given the nature of Maruti Suzuki, I don't think so there is something adverse which can happen. But the quantum of the increase or decrease in the operating performance, the volume of the cars, the production of the cars is something that we'll be watching out for in due course.
Well, three men, if they get into talking about cars, can continue forever. But we are on a live show, so we'll call it a day. I think thanks for putting that into perspective. Thanks for joining in on this discussion as well. That's well, a small conversation with RC Bhargava of Maruti Suzuki. No clear details out as yet. The stock, though, very interestingly, has jumped up a bit around the time that the interaction was not suggesting that's the reason just saying that the last 15 minutes, Maruti Suzuki stock has taken a bit of a bump up as well, 8538, about 1.5% higher. But Maruti Suzuki isn't all that is showing a bit of a bump up. A clutch of other names have done rather well. Our research team should be joining us in moments from now to talk about a bunch of those stocks which have done well. You know, just a couple of names that come to my mind. One of them is Sudarshan Chemicals. I was talking about it in the morning. A fabulous set of numbers, and it's showing in the way the stock is reacting today, about 12 or 13% higher, 12.5% higher. Volumes too reasonably okay. So by and large, that is one stock that has done really well for itself. I was looking at MCX, and I think something that we will talk about a bit later on in the show as well, but MCX too, about 13 or 14% higher, doing okay, and then a slew of other names. So let's get in our research team members to talk about all of these stocks. Firstly, Sudarshan Chemicals, which has gained about 12-13% after the company reported good set of numbers. Yash Upadhyay joins us to take us through the details there. Yash, good afternoon.
Good afternoon, Neeraj. So Sudarshan Chemical, as you said, reported an exceptionally good set of numbers. Their revenues adjusted for excise grew by 31% to 384 crore rupees. The net profit has seen a strong 32% growth in the fourth quarter on a year-on-year basis. Now, their bottom line, this growth has come despite of the fact that the effective tax rate has gone up in the fourth quarter from some 18.2% to over 25%. So that is a big beat there. Their EBITDA has gone up by 70% to 56 crore rupees, while their margins, they have expanded from 11.3% to 14.6%. Now, I was going through their investor presentation and a couple of important points. One, the strong showing in the top line, that has come on the back of improved demand in their India as well as Europe operations. The raw material prices, as I mentioned, they have gone up significantly, almost a 15% kind of an uptick on a year-on-year basis, and that has come in because of increase in certain raw material prices. That is because they procure most of their chemicals from China, and we have had that issue over them shutting down some of their polluting industries. That apart, strong cost control measures, that has aided their EBITDA margins, and going forward the company hopes to control their costs in terms of energy as they plan to commission a new wind turbine in FY19. That apart, they also have a proposed capex plan of about 250 crores for FY19. Some of the key people holding these stock, some key names are L&T Mutual Fund. They hold close to 1% stake in the company. Goldman Sachs holds close to 1.5% stake, and renowned investor Vijay Kedia, he holds a little over 3% stake in the company. Back to you.
Thanks for that, Yash. Of course, a very good day turning out for those who are invested in Sudarshan Chemicals, but not that great a day for those who are invested in Camlin Life Science, or rather Camlin Fine Sciences, pardon me. We have seen a substantial drop in the stock right now, and this is on the back of large volumes. In fact, this is the steepest drop that we've seen in 18 months. We do have Nikki Mirchandani, who's joining us to give us what could probably be a reason behind this sharp down move. Nikki, over to you.
Thank you, Agam. Actually, there are a couple of concerns which are plaguing the stock. To begin with, I'm going to start off with the shareholding pattern. Look at the promoter shareholding pattern as a percent to your overall percent of the company. That number has come down from 40% to 22% from Q4 FY17 to Q4 FY18. Also, if you look at the number of pledged shares, now that percent from 0 has come to 8.58%. Clearly, that's the second concern. Third concern that we have is the 6th consecutive quarter of losses that we're seeing for this quarter, for this company. Now, although the losses have come down substantially for this counter, but then still it remains over an elongated period. Also, if you look at the 4th and the 5th number concern that we have, that's the underlying debt. Now, that along with your working capital needs is something which is really weighing on the performance of the company. Look at the debt position. The long-term debt has increased from FY17 to FY18, which in turn has weighed on the total debt position of the company, which has moved from 321 crore to 357 crore. Also, if you look at the rating downgrade, now this is another issue which further weighs down around because it leads to a fear that the company would not be able to further raise any money for its impending capacity expansion plans. If you look at India rating, it has back in December 2017 reduced the long-term rating for this company from A to A minus. And also I said that the revision is coming on account of the EBITDA margin decline and elongation of net working capital cycle. However, there are few brokerages which have relatively painted a positive picture. It says that the green shoots for this company are yet to emerge, and the 4Q reversal, at least at the EBIT level on standalone basis for this company, definitely means it's a positive turnaround for the company. It sees improvement in FY19 due to further ramp up of blend business and utilization ramp up that we've seen in Chinese plant. Along with that, the management commentary too seemed to be that the company is now at inflection point. This is the brokerage that we have from Ambit as well as MQ Research.
Wow, what a slam dunk though for Camlin. Thanks a lot, Nikki, for putting all of that into perspective. That's the stock that has not done well. So we told you about one stock which has done really well, which is Sudarshan Chemicals. One stock which has not done well, unfortunately, which is Camlin, down about 11 or 12%. Now to a pocket which has done really well, and that's the liquor names. All of them have been on a high. United Breweries hit fresh life highs in the trading day today. United Spirits too jumped about 7% intraday. In fact, that mood percolated in some of the others too, the likes of Radico Khaitan, Som Distilleries and a few others. Let's go across to Agam, who's pulled up some fairly interesting analysis on this and uses some of the Bloomberg terminal elements to get us the trade data today. Agam.
Right, Neeraj, so we know how the earnings have panned out for both United Spirits as well as the United Breweries. I'm going to start off with United Spirits. We've had a really good run for the fourth quarter and ahead of consensus expectations, on the back of which we're seeing good gains coming in. In fact, up as much as 100 points when it comes to United Spirits. And when it comes to its volumes in today's day of trade at nearly 6 times its previous 20-day average. That said, you know, after we've seen this quarter play out, it is emerging that a lot of these broking firms had to a certain extent factored in the strength when it comes to United Spirits. Then that's the reason why, when you consider the analyst ratings out here, we're actually looking at more sells in comparison to buys. In fact, we have 43% sell ratings. And when it comes to the return potential for United Spirits, well, it's largely there at around its target price of around, well, 3,179. Do remember, in terms of concerns, despite the fact that we've seen as Prestige and above, segment do very well, Morgan Stanley, for one, has, come up and raise concerns with respect to its ability to maintain margins for United Spirits, and that could be something that may be bearing down on the stock. Before now, of course, the stock is doing very well, and as you can see, do remember, this is trading at 59 times FY19 for a price to earnings forward looking. So that's another factor that perhaps could play out for play out against United Spirits in the long run. Let's move on to United Breweries. Well, we've seen about 24% growth when it comes to volumes, ahead of the industry growth of around 22%. And on the back of that, we did see a lot of strength earlier in the morning, but that has come off for United Breweries, now trading largely flattish. As far as its volumes are concerned, at around 12 times, so 12 to 13 times its previous 20-day average. Again, when it comes to the consensus ratings, we're actually not looking at such a great picture. So when it comes to its return potential, we're largely there at around 1,164 with about 4 sells out of the 9 that we've had. And again, this is where we've seen valuation concerns play against the company at around 70 times. And that's probably the reason why we have eventually seen the stock come off. Do remember, this stock has also had a great run along with several other beer companies. Of course, we do know that Kingfisher has the largest market share in several of these markets that it is present in. But for now, the way things are panning out, at least as far as consensus is concerned, well, they're not that impressed. And when it comes to the price target, based on valuations, perhaps that's the reason why we've seen the stock, well, trading largely flat in today's day of trade.
Well, so that's some analysis and some return analysis as well for UBL. United Spirits as well. Keep in mind the technical researchers who had joined us earlier had mentioned that if UBL in particular, if it crossed above and stayed above the 1200 mark on close, then that's opening up new lines that unfortunately it has not managed to do. That's a bit of a lull really. Let's in fact try and get in an eminent expert of the charts, Manav Chopra. He's head of research at Indiabulls Ventures. If we can have him, it's slightly early, but hey, Manav is mic'd up, so let's try our luck with him. Manav, can you hear me? No, I don't think Manav can hear me. Manav, can you hear me? Let me try again. Okay, we'll just try and repatch that with Manav. So interesting, UBL just came off and it's failed to hold on that 1200 mark. What's done really well though today, and it's trading at new highs amongst other stocks. One of them is Pidilite, which is up about 4.5% or almost 5% at 1132, and that's scaling new highs for itself post numbers. Fabulous numbers, and the stock continues to rise higher. Very good. The other one is Britannia, 2 percentage points higher, 5824. I remember a UBS note which came out at 5,200 or thereabouts, downgraded in the stock. We were talking about how valuations are extended, and boy, have they expanded. So another 6% higher for UBL, Britannia. So that one is doing very well for itself. And Radico Khaitan at 4% higher is trading at new life highs for itself. Manav Chopra, head of research at Indiabulls Ventures, joins us right now on the show. You know, I would have wanted to start with some of the liquor companies, but let's first start off with the broad market view because that is buzzing over the last couple of days. Manav, good having you. Thanks so much for taking the time out and speaking with us. How are you approaching trade today? We are at the end of the week, but the last 2 days indicate that the markets have not really taken into account any kind of, no nerves at all in the markets. 2 days, about a % gain. Today the market breadth too is looking positive. Does all of this set us up for slightly higher levels early next week?
Absolutely. In fact, Neeraj, when we had spoken last week, I did mention the kind of a decline that the markets are witnessing more or less is definitely corrective in nature. We have already seen a very sharp rally from the lows of 10,000 towards 10,800, and even though the declines were quite sharp on the other sectors, but after a consecutive decline of more than 7 trading sessions, eventually the prices from the oversold levels will see a good bounce back, and that's what we have witnessed in last couple of trading sessions. The important key trigger to watch out for the markets since today's closing, if Nifty manages to close above 10,600 on the weekly closing basis, I sense we will see the levels of 10,700 to 10,750. That would be the immediate levels to look out for. The support for the Nifty would be at 10,550 for a very short-term traders. Similarly for Bank Nifty, the banking index has also taken support near its important rising channel, and this 7-8 days of decline has been retraced in less than 2 trading days. We've seen more than 50% retraced rally, so that is showing that the undertone is much stronger than other broader things, and also the momentum is getting back. So we have seen fresh short covering, which has also been induced by fresh long. So I think going forward, the bank Nifty would see the immediate targets of close to 26,350 to 400, and that would be the immediate target. So I think for the near-term perspective, one should definitely maintain a positive bias and maintain a buy on dips approach till the important support levels are held.
Manav, good afternoon. The rally on the benchmark indices today is being backed by some of these metal counters like Tata Steel and Hindalco. We've seen a lot of volatility, lots of ups and downs in a lot of these metal stocks. What's really going on? What sense are you getting from some of these movements when it comes to these metal players?
Actually, going, for the metal space, I think it's important to be more of a stock-specific approach than taking metal index as one thing. Tata Steel is definitely the weakest from the metal space. It has, last week did see a good breakdown below its important key support levels, and it is just retracing. I sense Tata Steel, in fact, going forward, one should definitely can do a pair trade. One can go long Hindalco or short Tata Steel. This could be the pair trade, which would work out quite well. But if I have to be long in the metal space, I would definitely would want to be with JSW Steel and Hindalco, JSW Steel, after a short-term correction, has seen a breakout on the daily charts, and the volumes are also indicating that going forward, we could see the levels of 340. Hindalco has an important support around the levels of 240 levels on the downside, and I think in the immediate basis 255 would be the target.
Okay. Mr. Manav, Sarvendra Srivastava also joins us on the show with his thoughts. He gave a fabulous call on Balrampur Chini last week, which we will talk about. Intraday has had big movements too. But Sarvendra, start off with the index call first. Again, you were relatively bullish. The last 2 days have been fairly good. What are you advising your clients to do now? If they had previous calls, or if they want to take a fresh call right now?
Yeah, very good afternoon. No, I think last what we carried was 10,400 on the downside as a level. So yesterday we bounced from there, 30 odd points, I think, were left. So if you can give me that much leeway, I think 10,400, that was the target that we were looking at. So that target more or less into this correction is over. So that call more or less got closed. And now what we believe is that it will take some time. So 10,400 to 10,650 will be a trading range. Now, last couple of days, we've kind of pulled back to the upper end of this range. So I would say that no great risk rewards from here to trade a call on the Nifty. So I would maintain a range between 10,400 to 10,650 and wait it out for the range to break either side to take a more convincing call. Or else, if you do some pattern, if you start making a pattern or something, then probably we can look at that trade. But as of now, I don't see any clear signs to take a trade on the Nifty. So I would say a range, and I would say an avoid at the moment.
Okay, Manav, one of your calls for today is Bharti Airtel. Is this because of the short covering bout that we saw yesterday? To what extent can we expect this momentum to continue? And your other call is, of course, M&M. If you could take us through both these views from your side.
See, Bharti, has observed a series of decline from its peak of 560, and we haven't witnessed any good retraced rally or any sustained move. I think the formation that the stock has observed in last couple of trading session is definitely hinting for a bottom in place, and there are a lot of short squeeze pattern that has also formed at the current levels. I sense that going forward, this stock could see a good rally close to the levels of 395, which is our immediate target, and the stop loss can be placed at 370 on the lower side. My other call is buy on M&M. I have been quite bullish on the auto space. It's quite some time, and Mahindra is definitely one of our top picks. The stock has recently observed a corrective decline from the highs of 890, and it has bounced from its important short-term support levels and has breached its trend line. So overall it's indicating formation whereby we could see a new swing high. Probably we could even exceed the highs of 890. So the upside target for this would be at 910 for a short-term positional trade, keeping a stop at 840 on the downside.
Okay. Sarvendra, good afternoon. You have 3 picks for today. Can you take us through your calls today?
Yeah, very good afternoon. The whole stance here now remains that we have kind of picked from the basket, which is very, very oversold now, because short-term correction target on the Nifty was met, and we can see stocks which have corrected more and very, very oversold. So if we thought that the market will spend some time here, so we thought that we'll take some bullish trades for a change after a long time. So I thought we'll take all the 3 on the trading side, on the buy side. The first one being tin plate, where we believe post a nice rally, a correction is over, and the uptrend should resume. So I would maintain their targets in the region of around 215 for tin plate on the upside, and keep a stop loss there at 182.80, and take a long trade. Tin plate, ideally you would want to put a stop loss on a closing basis, because it is a slightly illiquid name. Pardon me. The other 2 names are buy on KSL, which is Kaveri Seeds, for a target of 538 with a stop loss at 496.80. Again, a candidate which is looking like that it is shaping up well. And again, a oversold candidate, which is Hpcl. I think post IPO, the hammering has been taking it lower, and now first signs of this entire decline post IPO, probably first sign that it's kind of stopping now and wanting to turn. So here I would say that again, a closing only stop loss you'll have to take. The target is decent. You should look for a 15 to 20% kind of an upside here. So a target of around 68 to 70 is doable for Hudco, so more a positional trade. And if you're taking that trade, keep a stop loss at 53.80 on a closing basis.
Okay, Sarvendra gave an interesting call on Balrampur Chini as well, but you will have to wait a little bit for that when we discuss that with Sarvendra Srivastava, and some very interesting calls with Manav as well from his last time's appearances. But first, we've done a fair bit of technical call. Let's talk about the fundamentals. Deepak Shenoy, founder and CEO at Capitalmind, joins us right now on the show. Deepak, so good having you as always. Thanks so much for taking the time out. I want to start off with a basic question of what you're doing at your portfolio management services right now, Deepak. The last that I spoke on this topic, which was probably a month and a half ago, you were talking about deploying the cash in an SIP or a staggered manner. Are you continuing to do that, or are you holding out for some drastic falls that could come in, looking at all that's happening around the world?
Well, I think, Neeraj, to be honest, we are still doing the SIP mode. We continue to retain a fairly high cash component in most portfolios. So at this point, it's picking and choosing. Results, have been encouraging for a lot of stocks that we've been tracking. So, if those stocks were to fall a lot more, I might do a slightly bulkish purchase, but those points haven't yet come where we're looking at this and saying this is an insanely good purchase price. I think most of the stocks we're looking at are fairly valued. I would love them at lower prices, so I'm still looking for a lower price. I am not holding off. We're still buying a little bit. We're buying so little that it will take us 6 months to actually finish our buying, but that's fine.
Deepak, you have an interesting...
just before that, sorry, just want to mark this. I don't know what's happened here, but the rupee has had a really, really sharp uptick. Look at that, 67.76. I can't foresee any reason for this, but there's been a sharp move. I don't know if this intervention or something else that would have happened but a big appreciation in the rupee. The chart is inverted, obviously, as would be the case, but from 68.25 when we started off the trade today, right? Yes, 68.21 or 25, currently at 67.76. That's a really sharp appreciation that's come out in the rupee today. Can't quite fathom the reason really, but Deepak Shenoy, any thoughts here? Sorry, Agam, to cut you here, but this is more important here. Deepak Shenoy, just a really sharp bump up in the currency.
Yeah, I think much of it is probably RBI action. Now, RBI itself, purchases dollars in a very big way if it wants to, because it wants to move the market. It won't do these little tiny, 10 million, 50 million kind of trades. It probably do $1 billion at one time or a very short span of time to make an impact and tell participants that, listen, I am participating and I'm in the market. So players also take an advance view. If RBI is coming in, they will exit any short positions or positions that are long on the USD in comparison. So this will happen. We'll have to wait a couple of days to see how it settles. RBI interventions typically, they lose steam after a short time unless policy follows through. So it looks to me like an RBI intervention at this point.
Deepak, until this morning, there were all sorts of guesses about the rupee's likelihood of moving to the mark of 70. That said, do you have any plays, any short-term plays or trades based on the movement of the rupee right now in the equity markets?
Well, short-term, I guess the momentum should appear in the IT players, and we've been talking about mid-cap IT for a while. I think they benefit as well. There is almost no movement in pharma, which is another big beneficiary. So I think that's another point where you can pick and choose, especially stocks which are not extremely expensive. There is also textiles, which is another big exporting area. There is some complications over there because of the way the textile performance has been after GST has come in and how the refunds of some of the duties have impacted their working capital. But overall, I think some of the textile players will also benefit. There is a significant number of importers, especially downstream players in the petroleum industry, who will get hurt a little compared to what it was earlier. So I think so there's a play going long in the exporters, going short in the downstream oil component, effective importers of crude, and that I think is the play here. If you're looking at it from a short-term perspective. However, my long-term view over here is that the rupee does this every 5 years. It's going to do stay in a zone for 4 or 5 years and then do a massive 10 to 15% depreciation, simply because of relative inflation levels between us and the West. We are likely to depreciate, and we should in all probability see 70 plus. It wouldn't surprise me. So I think better be prepared for it no matter which way.
This smacks of, I mean, I would presume, I think somehow, whatever little understanding I have, we would presume that this has to be such a sharp uptick, has to be some sort of intervention that would have come in. I don't know if the Reserve Bank has talked about it at all or no, but just a really dramatic uptick in the rupee vis-a-vis the dollar. 55 paise right now. That's fairly strong, very close to the weekend. Anyways, we'll try and get some voices around this. So while we wait for that, there's a market beyond the currency on the equity side, which is doing really, really well. Couple of thoughts, Deepak. 2 or 3 names, expensive ones, which are becoming more expensive. That's actually the nature of the market, right? Just so concentrated. But now I'm looking at the non-Nifty names. Pidilite up 6% after the numbers. 1142. What do you make of the results and the valuations thereof? Bajaj Finserv at 6,057. Again, another 4% trading at life highs. And I'll throw in a Britannia there. 3 large cap names, non-Nifty, some form of consumption theme attached to all 3, direct or indirect, and all of them trading at new highs.
In fact, we're long all of them on our momentum portfolios, Neeraj. If you are, at this point, momentum doesn't look at valuation, it looks just at price momentum. And all these stocks are overvalued. I probably would find myself surprised if I were to hold them or start buying them now at fundamental valuations. But if you've held them, the momentum is in your favor. Pidilite's numbers have been awesome. As much as the stock sounds like it's overvalued, the numbers have been extremely, at least decent enough for a stock like it to justify some premium. Bajaj, I think it's partially a play on Bajaj Finance as well, and the insurance plays. So because the insurance play valuations have been kind of established by the likes of HDFC Life and perhaps ICICI Pru, you're getting a little bit of a higher blended valuation given to Bajaj Finserv. Having said that, it's still, according to me, fundamentally these are difficult to justify, all 3 of them. But at this point, momentum is there. There's acting like defensives as well. The big money seems to be going there. So these stocks, I think I would personally play them only in the short term, looking at momentum. This is not a great time to look at those guys fundamentally.
There was a lot of focus on Bajaj Finance last week, but it was Bajaj Finserv which actually took over, and then we saw outperformance coming through. This is of course only on a weekly basis. If we can get a chart check on Bajaj Finserv right now, which is trading at well over the mark of 6,000. Can I? Yes.
Do you want to go to Jayesh Mehta first? He's already joining us on the phone line.
Oh yes, of course, yes. All right, so we do have Jayesh Mehta of Bank of America Merrill Lynch who is joining us on the phone line. Jayesh, good afternoon. Thanks for joining us. What are you making of this sharp surge in the rupee right now? We have seen a very sharp appreciation. What do you think can you attribute the reasons to?
The reasons for depreciations are also global, and the reasons for appreciation are also global. So yeah, definitely today morning's OPEC statement of, maybe easing the supply, So that's definitely brought the oil a little bit down. And of course, last night you had U.S. Treasuries also below 3%. So both put together, I think more to do with oil. And if we don't see oil going above 80 very soon, I think we are in a safe wicket. But then it's purely to do with oil. And of course, the sharp move is mainly because of positioning. Unwinding also happens.
Okay. So, Jayesh, afternoon, Neeraj here. You don't reckon this could have been some central bank action? It's just so sharp. So just wanting your opinion on that.
No, it's nothing. It's more to do with global. You look at oil, right? After the OPEC news is almost like $3 to $4 down from the peak. So from that perspective, and is looking at a trend which is a little bit downwards. So that's purely because of that, and of course you had positions which were long, so that's kind of getting unwind.
Okay, Jesh, one last question. You must be having a busy day right now. What's the near-term outlook? So this is a point that you mentioned which we didn't foresee. But what now? I mean, after this sharp uptick that we've seen, is this the range that we maintain?
So I think once the positioning gets unwind, right, and if the oil moves back again, to rebuild the positioning also it takes time. But then if it sustainably moves back again, right, moves up again, then of course the same guy who sold may actually come back. But that, I don't think it will move with just $1 or $2 in the oil. So it has to look more near to 80s. That's when people will again, get a little panicky about it.
Okay. Jesh, we'll leave it at that. Thank you so much for agreeing to this quick interaction. So, that's coming in from somebody who is in front of the dealing desks, arguably not because of RBI central bank action, but probably got to do with what's happening across the world and predominantly oil. I mean, we've seen the part of this depreciation also happening in large account because of that. Okay, having said that, rupee is one thing, consumption is the other one.
Right. But no, actually, I was just addressing the Bajaj Fin twin stocks, and I was going to get a market check on both Bajaj Finserv as well as Bajaj Finance. Bajaj Finance, which has been relatively stagnant over the last 3 to 4 days. Can we bring in Manav for a view on both these counters? Manav, how are you seeing trade develop now, especially on Bajaj Finance, and how would you compare that to what we can expect for Bajaj Finserv?
See, at the current levels, definitely the momentum looks quite strong. You know, the stocks, both these stocks, after a good sharp rally, observed a short-term consolidation and eventually are observing some breakout happen on the intraday levels. There has been, usually in such a scenario, the momentum is usually what follows. And one key important thing that to look out is that as the prices make new high, you know, the volume also does. So this is the simple formation that has happened. I think going forward, we can expect this rally to continue on the upside. Short-term targets could be in the range of 5 to 8% on the immediate basis. And usually a breakout from such flag patterns, such targets are likely to be achieved within less than a week's time.
Okay, yeah, but both these Bajaj twins have done rather well for themselves. Deepak, Shenoy, maybe one thought on Bajaj Finance too. You give us a thought on Finserv. Does the juggernaut continue? And then, of course, my producer tells me you've been kind enough to share an idea for our viewers, something that they can invest into. If you can share your idea and why do you like it?
So firstly, I mean, on Bajaj Finance, I think it's been a phenomenal growth story. I mean, you've seen that move. I don't know if you watch or track all of the announcements that come even for promoters pledging shares. You would typically find Axis or SBI or some of the companies that would actually take promoter shares for pledging and then offer them credit, or sometimes it goes to the company and so on. Recently, we've seen a lot of entries in Bajaj Finance there as well, where actually people are moving to Bajaj Finance perhaps because of attractive rates or better service. So there is this growth that's happening now across. They're getting into secured debt from relatively unsecured consumer durable debt. They have, the one place that they haven't gotten into is home finance in any big way, but I think, there is a lot of scope for them to expand. They have extremely good credit practices, so I like that story. We don't own them. For some reason, they have sounded a little overvalued to us, but now they're appearing like they're a strong story, no matter what the price. But more on that as we add them, perhaps. On the stock idea that we've been looking at and we've owned them for a while, it's Tata Chemicals. And the recent results were also, indicative of, it's a massive change actually from what it was in the past. It was a slow-growing, relatively low-margin company that had a bunch of individual different businesses. They sold the fertilizer business to Yara, and they've also gotten rid of the Haldia plant as well. So that's gone. It's going to take off a substantial amount of the debt. I think they're left with about 1,500 crores of debt. They also got a good amount of money from Tata Sons when they bought over the cross holdings, I think of between Tata Global and Tata Chemicals. So in that process, the company is a lot less levered now. They're focusing on their primary chemicals area, which is, I think, definitely a much higher margin business than otherwise. Also on the brands that they own. For instance, they own Tata Salt, of which now they finally started advertising. I mean, you had a brand which was India-wide well known, but almost never well advertised. So you had that, you're having to move into the food stuff space. They do some of the grains and the dals and stuff like that. They are available online as well. So there's a change in the business mix, much lower leverage, I believe, at least from where it is. Don't look at current results because obviously with all the things that have happened in the last year, their PE is sub 6 or something like that. But I think sustainably they're at probably 12, 13 in terms of price to earnings, and possibly will grow to much higher levels. So I believe, longer term, 5 years, this is going to be a good story.
Okay, Deepak, well, thanks for joining us and giving us an update on the markets as well as taking us through some of your views. We will continue tracking Tata Chemicals. Of course, that's the call coming in from Deepak Shenoy from Capitalmind. But on to Traders Carnival now, we have Navneet Saluja D'Souza, who has a very special guest with her. We have Atul Suri of Red Enterprises joining her in this conversation. Navneet, over to you.
Thanks for that, Agam. Yes, I have a very, very special guest sitting right here with me. He's one of the most sought after traders, I would call it, in India. Hi, Atul.
Hi.
Thanks so much for joining us today on the sidelines of Traders Carnival. I'm going to first talk to you about the current trends that you're, witnessing in the market. What sort of market environment that you're foreseeing for this year? What's the current market prognosis that you have? Do you think we've topped out for 2018, or one can still witness fresh highs? I'm talking about it on a day, finally, when there is some respite, that we've seen some gains coming in the last 2 trading sessions.
Yeah, no, I think it's a very significant day because one is 10,600 has been an important level, and on the way down, it had found a lot of resistances. So taking out this level is significant. I won't say that we've topped out for the year or that we will not touch fresh highs. I think it's very, very possible. But what I think is that this year, going ahead, we are not going to have a massive move on the index. This index is going to actually wrong foot you. The moment you feel very bullish, the market will correct, and the moment you start feeling bearish, the market is going to go up. So this is a year where it's going to be more about stocks and being stock specific. And this is a year where I think quality is going to reassert itself.
Right.
Very different from what it did last year, and that's the nature of markets, because now markets are cyclical. No trend will last forever.
Right.
So last year we had a very good index move, and more importantly, a very big move in small caps and mid caps. But I think this year we will not have a very large index moves. Index will be in a broader range, in range bound, but I think quality will reassert itself, and we are already seeing early trends of that. So I think that will be the trend going ahead.
So would that also mean this could be the year for large caps and not broader markets, because we've seen sharp correction for the mid cap and the small cap index this year?
Yeah, I think large caps, but I think quality, because quality transcends large caps and mid caps.
True.
So I feel that even if you are a large cap, but you are not qualitatively good, you're having performances, it's not going to go up just because it's a large cap. Even in mid caps, there are a lot of stocks that have come out with excellent numbers, excellent quality, and I think they will continue to trend and keep making new highs. So I think it's about quality and performance. Last year was a lot of a hope rally. A lot of people thought that, this thing will happen and this stock will do well, or these earnings will improve. But I think this year, wherever there's going to be demonstrated earnings, or wherever there's going to be proof of the pudding, that is going to get rewarded and get disproportionately rewarded. And as I said, that already in this correction, we are seeing signs of that.
You know what, last year when there was such a big rally that one saw for Indian markets, there were a lot of new investors, Atul, who entered into equity markets, and most of them, they were putting their money in mid-cap and small-cap index, and now when you interact with them, they're growing. What are you going to tell them?
I mean, absolutely. The reason is because people, while investing with mutual funds, PMSs or AIFs, focus on returns. And that's the wrong way to go. You have to focus on strategy. So 6 months ago, 9 months ago, any investor you met wanted to put money in as a small cap fund or a mid cap fund, or a PMS that are a smaller mid cap strategy.
not because they cared for the strategy, it's just because the returns were so good. So people were chasing returns. And the pain with people who came in late is that they're seeing massive drawdowns. The fault is not the fund managers. The fault is not the strategies. The fault is the fact that if you chase returns, you cannot have a strategy that will outperform on both sides. If you have a small mid-cap strategy, it will do very well in a bull market. And we know historically that when markets correct, the correction here will be larger. Right. So the fact is that investors should focus on strategy. And strategy is a function of their risk profile.
Sure.
So, it's like as they say that if spring comes, winter is not far behind. And if winter comes, spring is not far behind.
Yeah.
That's the nature of markets. So if you've had that kind of drawdown and you've come in late, I don't think a fund manager or a strategy is to blame. That is the nature of the strategy. Follow a strategy, invest based on a strategy. If that strategy suits your profile, do not follow returns, because returns are very cyclical.
And do you think volatility will continue to be at elevated level for 2018? Because that's been the dominant theme. You talk to any market participant, they said there was no volatility in 2017, but globally now they're saying this will be the year of high volatility.
I think so. I feel so. And at the end of the day, as I said, that we may not make massive outperformance on the upside or downside. So you will see a lot of volatility, but net you will see the index for the year may not be a big plus or a big minus. So the distance the market will travel is a lot, but at the end the journey it covers will be very little.
Everyone's not a good trader like you, Atul. People who are investing in markets, how should they look at volatility?
So I feel that you have to, the only way, and even as traders we expect that we can ride volatility. The answer is no. It's a must. It's a very, very difficult phase. Unless until you do not stretch your time frame, your time horizon, it is very difficult to sort of surpass this. So make sure that your time horizon is large. Even people who are suffering very big losses in small and mid caps who've come in late, the fact is that if they give it time, it will all come back and give them very good returns. The problem is that people splice data. They say from Jan to May, my drawdown is so much. Hey, but go back 2 years and see, you're still up so much. So you cannot be selective. If you're going to play this kind of momentum, then give it some sort of time. The only way to sort of circumvent this volatility is to give it time. Because when markets emerge in the next cycle, all these funds and PMSs will do very well. So first, focus on strategy, and second is focus on long term. If you start taking short-term views and short-term return views, then I guess you're better off playing the derivatives market.
So you need to be a long-term investor to make money.
Yeah, you have to give it 3 years. You have to give it a cycle to sort of prove itself.
Okay, let's talk about the metrics which are in focus right now. Everyone's talking that macros now are deteriorating. Obviously, US bond yields are on the higher side. Indian bond yields have also surged. We've got crude prices which are inching higher. Rupee is depreciating. I think today we've seen some bit of appreciation coming in for rupee. What are the charts of crude and rupee indicating right now?
So I think for me, in this whole thread, which is very, very complex, I look at the tip, and which is, I think, crude for India, because it has immense impact on the currency and bond yields. And these all things really have a big knockdown effect on markets, stocks and sectors. So I really look at crude. I feel that crude in the short run has run up pretty hard, and it may kind of stabilize to correct, but I think it's going to be short term. Ultimately, I think crude is going to head higher. My target for crude has been $90. But it does not mean that, just because it goes to 90, Indian markets are going to get adversely affected. What's important for the market is the preparation. When unexpected events happen, the markets get surprised, and that's where the hit happens. But if the market starts building in or factoring in these kind of moves, I think the important point is that the market is coming to accept that crude will stay elevated.
You accept that, Atul, but when you look at a country like India, which is importing majority of its crude requirement, there is that fear of fiscal slippage.
Yes, there will be. There's no doubt about it. You're going to have pressures on currency, you're going to have pressures on bond yields, but I don't think it's going to go so out of whack. It's not going to just destabilize the whole thing, or people fear market crashes and all. I don't think that will happen. Yes, market corrections happen. Certain sectors get re-rated, certain sectors get derated, but that's the nature of market. If every time in my life, and will continue in the past and history, future, whatever you say, concerns have to be there. If there are no concerns, you will not have markets.
This also gives you an opportunity
to turn your portfolio. Absolutely. You will find that, right now what is happening is that the OMCs are getting smashed, and certain IT related sectors are going up. So if there is fear here, there is greed here. So these things will keep happening in the market. And that's what a money manager's job is, to navigate through these things. So we are surfers, there are waves that will go up and down. Our job is to just surf.
And you like surfing, isn't it?
I like the water, I like the sea, and I very often, tend to sort of draw parallels between that.
Okay.
But I guess it's just a passion.
I'm not going to deviate from markets right now.
Yeah,
you mentioned IT, Atul. That's one sector which has bucked the trend for 2018. I'm sure rupee depreciation is creating tailwind for this one.
Yeah.
What else, according to you, can buck the trend? Do you think pharma can be a dark horse?
See, I'm a trend follower, so I'm not into picking bottoms. I'm not into finding hidden gems. I'm into actually identifying longer term trends and riding them. So for me, what you pointed out, IT is definitely a space. And what I like about IT is that it's a very large sector in terms of market weightage. And a lot of people have been very underweight. So one is that when you have a sectorial breakout like in IT, and the beauty is when there's under ownership, that actually leads to a very big surge. So I really like IT. The second space, again, may sound very cliched and not too brilliant, is consumption. But I think that consumption is still going to has a long way to go ahead. Whether it's your FMCG or other related consumption stories, I think is here to stay. And the beauty in both of these sectors you will find is that it is a relatively detached from crude or, etc. and things like that. People are going to consume their biscuits and chocolates and coffees and milk, etc., irrespective of what happens to crude. And similarly, same goes for IT. So I think crude, as I said, is the big story for me for this year. I feel that crude will go higher, but in the short term, it will have a pause. And that pause is being reflected in the market, whether it's today or will be in the short term. So I feel that you want to get away, as far away from industries that are dependent on crude as an input.
So 90 is your target for crude.
Okay, and that conversation, of course, will continue. You'll hear on our social media pages as well. This is live from the Traders Carnival at Renaissance, Mumbai. Some flashes on your screen, and I know Sarvendra and Manav are waiting. We'll get to you, gentlemen, in a bit, but IDBI Bank numbers are out. The net loss of 5660 crores and gross NPAs, those numbers, 28%. The stock won't fall 20% because a lot of people probably preempted this, but these are not great numbers. Now let me first try and get in my colleague Ira Duggal. She's a banking editor at Johnson right now with a quick perspective here. Ira, nowadays higher gross NPAs number don't surprise us for a reason, because we now seem to have seen them a lot, but 28% is just mammoth.
Yeah, I mean, look at it in another way, right? More than a quarter, closer to a third of the bank's book has turned bad. And this is one of your larger lenders, most significant lenders. But just going to run you through the numbers. So the net profit or net loss at 5662 crore would be among the top 5 losses reported, largest quarterly losses reported by Indian banks. Obviously, provisions are to blame for that, because provisions have jumped to 10,544 crore compared to 5,864 crore in the same quarter last year. So they have taken a huge hit on provisions. That's not always bad, as we have seen even in the case of SBI. The market seem to like when you take the provisions up front. And what that big jump in provisions has managed to do is keep their net NPA ratio in check a little bit. So their net NPA ratio is about 16.7% compared to 16.02. So while they have seen the gross NPA ratio go up by at least 3 percentage points from 24% to 27% or near about 28%, the net NPA ratio has been relatively little bit more contained. I'll tell you why I'm focusing on that in just a minute. But I also want to look at the aggregate addition to the gross NPAs. So that has gone up from about 50,621 crore to 55,588 crore. We'll get back with more details on this, but the point here simply, and the reason IDBI Bank was important, was the fact that, remember, this is a bank which has been under the RBI's prompt corrective action framework since May of 17. And the question being asked right now is whether some of these banks will be put under a second round of PCA, which is much tougher. Now, if you go by their net NPA number, which is 16.69%, IDBI Bank falls in risk threshold 3, which is the highest risk threshold. Their negative return on assets of 6.68% also puts them in that risk threshold 3. The only thing that's that saves them a little bit is their capital adequacy ratio, but even that is dwindling because their capital adequacy ratio has fallen to 10.41% and CET1 ratio has fallen to 7.42%. We'll hear from the management, but if the RBI is going by quantitative understanding of what the pre-CA framework is, then this bank is a prime candidate for steeper restrictions. Neeraj?
Well, I hope somebody is listening into this. Hira, thanks so much for putting that into perspective. And amongst the top lenders in the country, amongst the highest losses, maybe losses amongst the top 5 in the quarter that is released or probably ever as well. This is not joke. I mean, we are kind of smirking or smiling at the fact that the gross NPA levels are at 28%, but that's just serious carnage in the bank's books, to be honest. And 3.5% done for IDBI Bank, not a great day at all. Sarvendra, it used to be a fairly popular trading stock, probably still is. 19 million shares traded seems to suggest that there is enough and more activity on IDBI Bank too. This is a result-related move, so I want to hold you to it if it doesn't turn out the way you're predicting. But just looking at the charts right now, what would you think could happen to IDBI Bank?
I think broadly I would say that the stock, the trend has been damaged and the stock needs to do a lot of repair work. So extremely going short term, I think over the last week, 10 days, if I look at it and if I say that with the result, probably it's basing out, then there's a small bullish head and shoulder formation which is visible. But I would say that I don't want to trade that, and the stock is trading at a long-term 200-day average for the last now month and a half, and you want a clear breakout from this range. So I would say a 60 to 70 range, that is a no-go range, and once you break past 70, you probably want to put some longs in the system, and a break below 60 probably you use to short. Rest, I think it is in this 10-point band, it is best avoided for the next couple of sessions, if not more.
Okay, the other stock which is on a tear right now is Just Dial. Of course, we've seen earnings come through, and on the back of that, we've seen 2 straight days of gains. Manav, can you come in on Just Dial? Can you tell us about the kind of trends that you're witnessing right now, and what levels can one watch out for?
Yes, in fact, the stock after a good sideways consolidation has observed a very good breakout. But one thing to note is that, the stock recently, after bounce from its recent lows, has been forming a series of minor tops and bottoms. This breakout has been accompanied by very good volume in the last couple of trading sessions, and the prices have also closed above important weekly support, levels, and it's also closing above its long-term averages. So I think going forward, you will definitely see some sort of a momentum, and it's a complete trend reversal that has happened, at least on the short-term front. So on the immediate basis, we could see the levels of 540, 545 on the upside. The support for the stock would be at 490 on the lower side. I recommend a stop loss below 490, and one can actually have a short-term trade into this even at the current levels.
Okay, with that, we're going to slip into a short break, but don't go anywhere. In the next 20 minutes, we also decode as to what we can expect in the markets in the coming week. So back in a bit, stay tuned in.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Hi guys, we're completing 1 year of the mutual fund show on Bloomberg Quint. Take a look at all that we've done over the last 12 months.
Optically, nothing is cheap. Volatility is integral part of financial markets.
Prices change every microsecond and NAVs change every day.
I have been always suggesting that if you can be Kumbh Karna, invest today and go to sleep for next 14 years.
Join us on the next leg of our journey as we attempt to make the conversations even more meaningful on your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, only on Bloomberg Quint.
Welcome back. You're watching Countdown on Bloomberg Quint Live. Well, the markets are looking up right now. Some strengths seen. But what is it that we're witnessing when it comes to some of these stocks which are advancing? We have Yash Upadhyay joining us to give us the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Agam. So a lot of stocks that are moving on the back of earnings. We already addressed Sudarshan Chemicals with Time Technoplast. That is another name. It's up almost 15% today. Now their revenues, they have grown by 16% to 943 crore rupees. The net profits up 30%, while their margins, they have expanded by nearly 200 basis points on a year-on-year basis. So all in all, a good set of numbers, and the stock's reacting quite positively. Now, Gateway Distriparks, this one's locked in a 20% upper circuit today after the company announced that they would be buying the entire stake of global investment arm Blackstone Group in their subsidiary company, which is Gateway Rail Freight, for a total consideration of about 810 crore rupees, with the deal expected to be completed within the next 90 days. GAIL is up 3%. That one too came out with their numbers yesterday, earning it a big upgrade. We had CLSA come out with a report earlier in the day wherein they have upgraded their recommendation from a sell to a buy, and they've also hiked the target price from 337 to 405, indicating a return potential in excess of 31%. And finally, Just Dial, this one's been gaining for the last 4 trading sessions since it announced their Q4 numbers. It's up 9% today as well, and in the last 4 days has managed to gain close to 25%, with volumes almost double the 20-day average. Back to you.
Thanks a lot for that, Yash. GMM Pfaudler is the other one, I think, has just gained quite a bit in the last few minutes of trade. I'm looking at stocks which have gone up in the last few minutes, include a Hathway Cable, which is up 3% or 3.5% from the levels that it was trading at. Dhanuka Agri has had a bit of an uptick in the last few minutes of trade, and there is some strength in Shilpa Medicare and Diwan Housing too, stocks which have gone up in the last few minutes of trade. Anand, Tandon, market expert, joins us right now on the show with his thoughts. Sarvendra and Manav Chopra are with us. Gentlemen, all of you, thank you so much for staying in, and Anand, thanks for joining in today. Anand, if I just look at the index moves, there is a fair bit of confidence, and within that index move, there is a fair bit of pullback that's happened in the oil and gas names, both upstream and downstream. Was the market playing in on a rumor or an expectation that the PTI reported yesterday, and now is trying to digest that maybe oil may not be that bad? Because ONGC, Oil India, GAIL, IOC, BP, HP, all of them are up and about today.
I think it's, everything is up today. I don't think it is anything specific to upstream or downstream. But within between the two of them, obviously, first of all, the stocks have been beaten out of shape quite badly. And the second thing is that the refining area still looks quite decent, because if at all you're looking at the oil sector, refineries are not going to do very badly, at least in the current environment. And even if the news were to be true that, there would be a windfall gain tax on the upstream sector, that will actually ease the pressure on the downstream. So all in all, there is a case to be made for looking at the downstream companies. I don't think the same applies for the upstream, except for the fact you may have a view that the oil has perhaps peaked out, in which case, it may come down again. But all in all, that's not I don't think there is anything specific for that move today, other than the fact that the market per se is in a very buoyant stage today.
Anand, good afternoon. We have seen a little bit of a reversal on the benchmark indices, but when it comes to the broader markets, in terms of opportunities in quality stocks, how are you viewing some of these stocks when it comes to those which are fundamentally much sounder in comparison to valuations for the stocks that you are tracking right now? And if you could also give us some examples.
Well, I think if you So the key call you have to take is whether the momentum will continue or you will see a slowdown in the momentum because of whatever is happening in terms of interest rates and the rupee and so on. If you argue that the momentum will kind of ease off, then obviously you have to look at value companies rather than growth companies, because the growth companies are being priced for growth and then some more. You are assuming that the growth will continue in perpetuity. Whereas the value companies, many of them have been thrashed out of shape. So for example, the utility sector, it's hardly the most exciting sector right now. There are issues in terms of buying power and so on. But there is also no new capacity coming up. There is idle capacity which will get on stream, for example, over the next 12 months or so, because many of the older plants are getting mothballed because of problems with pollution and so on. And one could argue that at about 2.5 crores per megawatt of capacity, you're probably seeing the bottom of the capacity cycle. So clearly, that is utilities is one area that I think bears mention. It's not going to make you rich between today and the next quarter earnings. But I think if you were to look at it on a 2-year basis, there is a high probability that you will get outsized returns there. So there are sectors like that which I think will slowly come back into shape as the front line eases off. But in a market like today, where clearly it's fair picking for almost everything, you don't have to search very hard.
Okay, Anand, stay on. So much more to talk about. We'll get in closing strategies from Manav and Sarvendra, but before that, it's that time of the show when we get you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so today the battery stocks are doing well. Exide seems to be outperforming Amara Raja, but nevertheless, both of them are trading much higher. Exide is up almost 6%. Amara Raja is up almost 2%. Some of the HNIs are actively accumulating these counters. That's what we hear from some of the dealing rooms. The other pack is Tata Elxsi, which is up almost 3%. A significant amount of domestic mutual fund flows are going into the counter, so that is something that is positive. And Indian oil is something that dealers are speaking about. It's up 5%. The way crude and rupee have behaved, that's something that dealers indicate that there is heavy accumulation that's happening. But Yatin has more.
Well, as Darshan was mentioning, IOC dealers are also recommending a buy on HPCL. That is one stock, again 5% up for that one at the day's high. In general, dealers are talking about the oversold region in which the oil marketing companies are, and from here on, dealers do expect some bit of bounce back as far as the entire oil marketing pack is concerned. So HPCL is something wherein dealers are recommending a BTST kind of a strategy. Apart from that, do watch out for Tech Mahindra. That is one stock wherein domestic funds are said to be buyers in trade. They will be reporting their quarterly earnings as well. So Tech Mahindra is something wherein dealers remain positive on. And Deccan Gold Mines, that is also one stock. Has been volatile. Remember, the stock has been moving, plus or minus 5% in that circuit band limit. But today, after the HNIs have been, buying shares for the open market, we are looking at some, good volumes as well as price action in the stock.
Okay, well, of course, Tech Mahindra stood out for me because we are expecting earnings. Thanks, Yatin, for bringing us those, dealer room checks. But like I said, Tech Mahindra, of course, remains in focus as it announces its earnings a little later on in the day. That said, I also want to pull up Indiabulls Housing Finance. What we're also witnessing right now is a surge in the last half an hour or so, and it's also the top Nifty gainer as of now. Manav, can you come in on Indiabulls Housing Finance? It's currently trading at around 1170 after substantial weakness over the previous 3 weeks. We are looking at a little bit of resurgence. Is this largely on account of short covering?
Sorry, I will not be able to comment on any of the our group companies, but from the HFC space, I think even Bajaj Finance or DHFL are some stocks, which are trading near the important support levels. So DHFL specifically has also observed a good breakout from the current level. So I think going forward, in case if the levels of 620 is breached on the upside, we could see the levels of 640. So this is one stock that we can also look at from the housing space.
Okay. Before we get in closing strategies, there's so much happening around. Let's go across. I think the Idbi Bank management is talking. Let's just hear out a brief of that. Then we come back and take in closing strategies.
Because we were the first bank where the capital conservation buffer was dipped.
by any bank operating in India. So we have reached to CET1 CCB at 7.42% against the regulatory requirement of 7.375, which was as on March 17 was 5.64%. So there is a substantial improvement as far as CET1 is concerned. We maintained the total capital adequacy ratio at 10.41%, vis-a-vis last year's number of 10.70%. Despite of the fact that during last financial year 17-18, we exercised the call option on 81 bond, which was amounting to rupees 5,000 crore, resulting into 2% impact, negative impact on the capital adequacy. Despite that, we were able to maintain 10.41% as our total CRAR. As we explained to you that to reach out these capital numbers, we draw out certain strategies. One on the risk-weighted assets. We reduced our RWA from March 17 to March 18 by 18%, from 2,68,000 crore to 2,20,000 crore. We started this process in the month of Feb and March 17 itself. As on December 16, we were having close to 3,26,000 crore of risk-weighted assets, which now has come down to 2,20,000. And we told that we are adopting a capital light business model. And through capital light business model, as well as the churning of our existing portfolio, wherever there is a high risk, we have to try to come out of those high risk assets. So through capital light model, our retail versus corporate book, the composition had changed from 60-40 as on March 17 to 55-45 as on March 18. Then credit RWA to the total advances has come down from 110% as on March 17 to 90% as on March 18, despite of the fact that our non-fund based book is higher in comparison to many of our competitors in the market. If we include in the denominator the non-fund based book as well, then the actual credit RWA to the total exposure is 75%. So which itself is a big achievement, and that could happen because of various strategies. As we committed that total non-core asset sale during this financial year, last financial year 17-18, we could sold out our various assets to the extent of 4,800 crore, 4,500 crore, with a capital gain of 3,870 crore. Then there was an infusion of capital by the Government of India, and total the Government of India infusion of capital was 12,471, including recap bond of 7,881 crore and 390 crore.
All right, that's Idbi, and we'll of course get you snippets of that conversation. But just last 5 minutes of trade left. Need to wrap up the markets. Before we do that, Sarvendra, Manav, let's play a bit of a rapid fire since we've had slightly short time before the market ends. So maybe would expect I'll ask you quick questions and maybe quick answers. Sarvendra, to you first. IOC, HP, ONGC. Any trades on any of these?
I will go with HPCL out of those three names if I have to go. I had picked up I actually picked up Chennai Petro for BTST. But I will go with HPCL. I think a decent reversal there, a 3-bar, nice reversal with momentum. So stock could go towards 305, 310 over a day or two. And anybody wanting to take that trade will have to keep a stop loss below 289.
Okay. But your top closing strategy is Chennai Petro. Is it, Sarvendra?
Yeah, Chennai Petro was my BTST, where I believe that the stock could go towards, the stock could give you a 6-point move on the upside. So around 286, 287 is what I would look as a target for tomorrow. Okay. And while doing that, I'll keep a stop loss at 278.40.
Okay, 3 rupees stop loss, 6 rupees target on Chennai Petro. This is the pure BTST. Manav, what would your top BTST be?
See, at the current levels from the pharma pack, most of these stocks are seeing some sort of a bottoming out. Glenmark, in fact, is showing a good bottom reversal. At the current levels, I recommend buy into this. It's also observing some short squeeze pattern. So a stop of 532 on the lower side for an upside target of 550.
All right. Anand, coming down to you, any opportunities right now that you are spotting in the markets in terms of themes or stocks?
As I said, there are lots of beaten down themes which exist, which are outside the consumption and the private banking space, which are the two areas which have been doing really well. And those include the less favored ones, as I said, utilities, the corporate facing banks, the infrastructure plays, the defense area. All these are stocks which have fallen out of favor. And I think you will find that there will be some reasonable bounce back in them if the market has to continue.
Interesting. One quick thought on a stock which has really gained the last 2 days, Manav Chopra. Time Technoplast, if you track that one, went down all the way to 122, has bounced back to 154. Can you pull up on the charts and tell me what you think of the charts?
See, the stock after a series of decline has bounced from its important long-term averages. Definitely the short-term momentum is coming back into play. I suggest that, at the current levels, one can look to only buy with a strict stop loss, which would be placed at 150. In case if the levels of 150 is held, we can expect the upside levels towards 168 and 172.
Okay, I'm going to follow through with a question on Sudarshan Chemicals. That's the other one which has seen a sharp surge. Sarvendra, can you come in on this one? There has been a spike in Sudarshan Chemicals on the back of heavy volumes, of course, largely attributed to earnings. What's your view here?
I would say I would avoid. It's a slightly illiquid name, and it's more to do with the event. So you'll have to let the event pass, probably let it settle a day or so, and then probably take a call. Very, very illiquid and a stock which we don't cover regularly.
Okay, with that, I'd like to thank Sarvendra and Manav for joining us and taking us to their views. But I'd request Anand to stay on because we do want his closing thoughts on that. With that, I'm going to toss it over to Neeraj to tell us about how the markets have panned out for today.
Yeah, well, thanks, Agam. Well, both me and Agam will take you through the market wrap over the next 2 minutes. But doing well, no surprise here, 1% higher yet again. So 2 days in a row. The final 2 days of the week have been fabulous. Today's session, the mid caps and the small caps is the difference. They've done extremely well. 1.6% for the small cap and 2% for the mid cap index. That just gives you an idea of what the market breadth would have been. When we started the show, it was 1.6% for the mid cap index. It's now up 2%. So very strong show here for the broader end of the spectrum. But talk about the large caps first. OMCs, IOC, BP, HP. I'll put in ONGC out there too, doing extremely well. Indiabulls Housing Finance up 5%. Hindalco and Tata Steel amongst the metal names doing well. In fact, there is very little which has not done well. That's the problem today. Yes Bank about 3.5%, Adani Ports about 2.5%. And as I said, not too many losers. Bharti Infra maybe, ITC down about 1%, SBI 0.5%, but nothing really worth noticing. Largely gainers and some very strong gains by a lot of heavyweights today. That's a large cap action, Agam. The mid caps, a fabulous day in trade too.
It certainly has, Neeraj, and the advance decline ratio is a witness to the good day of trade coming in through. So I'm going to start off with some of the key gainers in today's day of trade. Let's start off with Gateway Distriparks. A surge we've seen about locked an upper circuit of 20%. This is after we understand it's taking over a railway unit, and that certainly has seemed to have played out well when it comes to investors. Two other stocks that we're keeping an eye on the back of good earnings coming through. So the first one is Time Technoplast, 14% surge there. Do remember a lot of HNI names invested in this particular stock, and we've seen a surge out there. And the other one is Sudarshan Chemicals, yet another name in which a lot of high net worth individuals have stake in this company. That's also advancing by as much as 11% right now. What we're also tracking in terms of some of the relatively weaker counters is Idbi Bank. Well, we've all seen that NPA ratio come through, but it's actually recovered to a certain extent from the day's lows. And the other stock in the mid-cap space is Granules India. That continues to grind lower and lower. Now below the mark of 80, some very big concerns coming through. It's down by as much as 4.4%. And on the whole, if you leave some of these counters aside, it certainly turned out to be a very, very good day of trade when it comes to, well, not only the benchmark indices, but broader markets too. So that's what we have in terms of trade for now, Neeraj.
Yeah, well, the markets seem to have shut shop now, 3:30 done. And as we shut shop, here's the index for you, up about 1%. We'll also get you the weekly wrap, but just before that, the market breadth and the turnover today. Before we move on to what's happened for the week, the market breadth very positive, 2:1 in favor of the advances, and the turnover. Well, par for the course, I would say, Agam. Maybe the F&O turnover slightly higher.
Right. Actually, this is largely on account of the fact that we are ending into, what has been a very volatile week. We did see a lot of activity in the options side of things, and that's the reason why the F&O figure is looking relatively higher at around 7 lakh crores. Don't forget the cash market. This is not the kind of number that we've seen over the previous couple of days. That's been hanging around 20,000-25,000 crores. But today, well, if you consider both the BSE and NSE cash together, together, well over 34,000 crores. So that's another surprise out there. But well, what is on expected lines is the NSE turnover today.
Yeah, par for the course. And lastly, let's just see what the week has been. If we can get the MRR2 function of the Bloomberg terminal up, and we'll show you what's happened to the index and the specific names here. SBI up about 12%, but hey, Agam, good moves for Bajaj Finserv. That one continues to rise and shine. Some of your IT names featuring out here, Infosys and HCL Tech. So not surprised there. The gainers look fairly impressive. What about the losers?
Well, as you can see, more weakness, more volatility coming in through for Hpcl as well as other oil and gas names such as ONGC. Vedanta, of course, continues to show a downtick, but this is largely on account of a company-specific problem that we've seen it come through. And of course, Tata Steel showing some amount of weakness. Ultratech Cement, so surprisingly, despite the fact that we've got some news on the back of its rearrangement of the cement business, well, showing weakness down as much as 5%. However, I would say that the momentum clearly lies with the gainers in this week.
Yeah, interestingly, Ultratech and Century, both of them have come off despite the thing being in favor of the ratio, looking like in favor of Ultratech Cement. But anyways, this is a picture at close. Final thoughts from Anand Tandon, 2 or 3. Anand, thanks so much for being patient with us today. So much was happening around, so I had to cut across to a lot of things. Information technology, Anand, for almost all the caveats that people have thrown about the limited growth numbers and the valuations that these stocks are trading at, the juggernaut rolls on. TCS is now at 7 lakh crores market cap. Infosys is not far behind. And now the large caps are making those daily moves which the mid caps used to do about a couple of months ago.
I think you're still continuing to see investment into that sector because it was underweight. And for the longest period, even when the numbers began to look a little better, I think most fund managers decided that the growth wasn't attractive enough. Now with the rupee looking like it's going to go a lot weaker, perhaps from here, that becomes a natural hedge. And I think if you are going to be betting on US revival, especially on their financial space, then I think willy-nilly the Indian IT companies will also start to benefit. So I think overall, the relative valuation basis, it still looks cheap, of course, relative to the market, not to the growth numbers. But I believe that at some stage, the growth will look a little better. That said, I don't think that you'll get back to the heydays of IT, right? You're not likely to get 20% growth anytime soon, if at all. So the companies will remain somewhat subdued in terms of how much they can go up from here.
Anand, as we've noticed, the State Bank of India is the largest gainer in this week. And this is a little bit of a surprise because if you look at the other PSUs, well, they have been under pressure, largely on account of earnings. My question is to do specifically with the public sector space. Of course, it's likely to remain selective. But what is your view on some of these relatively larger public sector banks which have found favor with investors? Would you still delve into something like an SBI?
So, I'd break that up into two parts. Public sector as a whole will continue to lose market share. There is absolutely no two ways about that. And many of the smaller banks will need to necessarily get merged with the others. So therefore, there are two risks that you're seeing with the larger public sector banks. One, that they will lose market share, and two, that they will possibly have to, bail out a whole bunch of horrible assets somewhere so that the depositors can save their money. That essentially leaves you with a company like SBI where the danger of a merger is not there. They have just swallowed 5 of their subsidiaries. And they apparently have written off most of whatever is due to be written off over the next couple of years. And therefore, it's likely that you are not going to get any negative surprises there. And they are trading at or below book value, depending on which number you are looking at. So with that kind of construct, possible double-digit ROE, I think there is clearly a case to be made for buying SBI. Especially since one is expecting to see a revival in credit growth. So I think you would look at corporate-facing a large bank like SBI as part of your portfolio. I would argue it's also a case for looking at some of the credit rating agencies, for example, because if the corporate growth has to pick up in terms of credit, that's another sector that can do well.
It's interesting you say that. We spoke to, I think, Care Ratings, and they did forecast the basic growth numbers looking okay, just some decline in the SME space, but that notwithstanding, the basic growth numbers to be okay. Anand, my question is pertaining to large cap auto And while the monthly numbers seem to be going on fine and smooth, there is some bit of pain point there. Ashok Leyland has come off from the levels that it was trading at. Maruti this year has underperformed the Sensex by almost 10%. There are chinks in the armor of some of the stronger names. Can they kind of recoup or recover some of the lost ground?
I don't think that they are falling off because of anything wrong with their business. Business momentum, especially for something like Ashok Leyland, I think continues to remain very strong. And if you expect to see, overloading not happening, if you expect to see some amount of perhaps some policy in terms of cancelling the old registrations and so on for very old vehicles, I think you will continue to find that for the next 2 or 3 years, the HCV sector continues to do well, the MHCV sector. However, that said, they've also gone up a lot, right? They have been one of the best performing sectors and they're most overowned in the overall story. So if you expect to see some institutional selling happening anytime in the market, these are the ones that is likely to get taken off. And I think that's all that you are looking at. If the market has to continues to move up from here, I think they'll pretty much get back their mojo.
Thank God. Anand, we'll leave. I think we'll get him some numbers, but we'll leave it at that. Thank you so much for taking the time out and being with us today, Anand. I really appreciate your time. Sorry for the patchy discussion, just a lot of news flow that we had to address. That's the view from Anand Tandon with his thoughts. Take a break on that note. In fact, wrap it up on this leg of Countdown. Up next is the markets wrap from Bloomberg Quint, so stay tuned.